Okay, welcome back. Now, where we finished up, we had just totaled the current assets here, and we were about to move on to the less creditors amounts falling due within 1 year. So I had put the assets in the first column, and I'm also going to put the creditors amounts falling due within 1 year in the first column. So first few are straightforward anyway. Electricity due, it comes straight out of the part 7 of the additional information. Electricity due on the 31st of the 12th 2009 is 320. So put that in here, 320. Okay. Next one, I've said fees prepaid, but it's part 3 there. Clients' fees include fees for 2010 of 5,000. So that's 5,000 euros worth of fees that they paid for next year. So that's a liability, 5,000. Okay, next one then is I've written down as bank, and we already mentioned earlier that the bank figure of 75,450 here is an overdraft. So we're going to put that down here, 5,450. Okay, and lastly, creditors for supplies is on the part 6 here. Creditors for supplies to the nursing home is 1,800. So I'm going to put that in here, 1,800. Okay. Totaling that up, what have we? 1, 2, 3, 4 of those. Totaling that up and putting it here, it's going to be a lot bigger than the assets or current assets figure. What are we talking about here? 15 and 82. Okay. Right, I'm sure that's probably right. Okay, so next thing is, ordinarily we're subtracting this figure from that figure, and this case we are also, but we're going to end up with a negative over here when we do. So if we subtract that from that, let's see, 370 anyway is the end of it, and 79, isn't it? 79, 370. And we're adding that figure, as always, to the figure that we have. Where are we going? We're adding this figure, 79,370, to the figure we have up here, the 998,550. But because it's a negative, we're adding a minus to it, so it's going to reduce the balance in total. So if I add the two of those together, I get 919,180. Okay, double check the addition on this, I would say, afterwards, although I'm feeling reasonably confident today. Right, so down to the finance buy section, and here I suppose I've left one thing out that you could add in here sometimes, but there's usually no mark for it, is a heading capital and reserves after the finance buy part. So everything in here is your capital and reserves figures anyway. So then in the first two columns I've put in a kind of a heading as well, one for authorized capital, one for issued capital. Now you must always put in the authorized capital figure in the balance sheet as well as the issued capital figure, even though it doesn't play into any of your calculations. You'll see it's just written down and then you don't add it to anything or subtract it from anything, but there is often a mark going for it anyway. In a lot of cases there's a mark going for it, so you must always put it in. So where do we get the figure from? Up here at the start it tells us authorized capital 450,000, issued capital 320,000. So again, just down here, 450,000, not going to be used again really, but needs to go in, and 320,000, which we will be using to calculate our total figure for the capital and reserves. So next, the revaluation reserve. Well, we'll get to that in a second maybe, because there's a bit of work in that. I'll have to do some workings. The profit and loss balance, well, we get that from our profit and loss account. Let me just get the profit and loss account ahead over here. It was, oh yes, 401,180, 401,180. So just transfer that straight in. 401,180, and then it's the revaluation reserve figure. So let's just turn that over for a second and calculate that revaluation reserve. So what I would say is that the revaluation reserve is made up of the amount by which the cost price has risen, I suppose, when you did a revaluation, and the amount by which the depreciation has gone down. So if we look at, first of all, the cost, what it should have been for land and buildings if you didn't do a revaluation first. So you started with land and buildings 550, so I'm going to write that over here, 550. Okay, you had an extension, new extension, 200,000. We see there in the receipts and payments account. So it should have been 550 plus 200,000. If you hadn't done the revaluation, the cost would have been 750. But the revaluation that you did at the end of the year increased the land and buildings to 900,000, wasn't it? 900,000. And that is an increase of 150,000. 150,000, is that right? Then the depreciation, well, if we hadn't done this revaluation, the depreciation would have been made up of, we take our depreciation up to the start of the year from the statement of capital and reserves, and we can see land and buildings depreciation up to the start of the year was 33,000. So if we put that in here, 33,000. And that was up to the start of the year. And then during the year, we wrote off a further amount of depreciation in our trading profit and loss account. We can see on buildings it's 15,000 there. So we put that onto that. So this would have been our figure for aggregate or total depreciation or accumulated depreciation in the balance sheet if we had not revalued. Okay. Now, what happened when we revalued? Well, if we take the depreciation as a minus figure, it went from minus 48 up to 0, if you like. So it increased by 48,000. Really, it was set back to 0. You can, if you want to say it decreased, that's fine. But for the sake of it, I just want to show that the business benefited to the tune of 150,000 here and 48,000 here. And it's that 150,000 plus that 48,000 that give you that revaluation figure of, is that 198,000? Okay, so assuming that my figures are correct there, I'm just going to turn over here and get rid of this sheet up here again now. So we have, where were we? We were down at the bottom here, Revaluation Reserve, 198,000 I think I said, and add the three of them together and look, I presume we get 919,180. So 919,180 there again.